Alex, welcome to the show. I'm so excited to have you here as a financial professional. I think it's so important for us to have women and women of color who are giving us like sound advice when it comes to our money. If you're like me, your introduction to the personal finance world was not necessarily through someone that you actually felt seen and could identify with. So I'm curious for you, what brought you into the finance space initially?
Thank you for having me. Just straight necessity. That's all. A bit about myself. I had my daughter when I was 18, just a couple months after graduating high school. And I had glorious plans of being a psychologist, but what does that come with? Years and years of school. And as a single mom, I needed the money. And so I actually went into accounting because I found that it would provide stability, a
Mm,
stable paycheck. And I knew that it was something that I could grow. Being a young mom, that's the main thing that brought me into the world.
okay. Now, what was your money story like growing up? Like, what are some of those lessons, maybe good and bad, that you grew up learning about money?
Very similar to a lot of households of people of color, money really wasn't talked about. And if it was talked about, it was more so money doesn't grow on trees. No, you can't have that. And so very similar to that, except my grandmother was someone who she swiped a credit card. And so growing up very early on, realized, oh, you could just pay for things with lipstick. And so that was a lesson that maybe was not such a great lesson because then later in life I struggled with credit card debt and things like that. But my lessons with money was it just wasn't talked about. And so it was an area where I grew up as an adult not talking about money and all the things I missed out on by just not knowing that these were conversations that were had growing up.
I can imagine that the CPA field might not be like the most diverse field. So tell me about that experience of working in accounting as a woman of color.
Yeah, so about 2% of CPAs are Black. I'm a CPA, 2%. And so it's a very small number. And growing into public accounting, and I'm in a small town in Southwest Florida, but in 100 employee firm, there were two Black employees, like in 100 member entity. And so it's really, I was like, oh, there's really not a lot of us around here. And so like statistically, you won't expect it to be. And then I went on to become a certified financial planner as well. And so as a Black woman, 0.5% have both of these designations. So it's a very small number, but the skill set that you obtain with these designations are so impactful for people that look like us. And our stories are so unique. But when you don't have people that look like you, what I found when we would have clients come into public accounting is they weren't, I would say, treated and handled properly because they just had different questions that they didn't even know to ask. And so, unless you are in the psyche of, oh, okay, this is a struggle that they may be dealing with, I often found that they were underserved.
Let's dive into that because one of the things that I talk about in my book is this idea that there's not this one size fits all approach when it comes to personal finance. And what happens a lot of times with finance professionals who don't have that cultural competence is that they don't know what those struggles could look like for a person from a minority community, a first generation wealth builder. Like there's just different obstacles, both practically, but also like psychologically that people have to navigate through. And I'm curious, what are some of the most common, maybe mental blocks that folks who are from our communities have about money? And also, what are some of the hangups that people have about working with financial professionals? Because I know a lot of people who think like, oh, everybody's just trying to scam me. I can't trust
Yes.
anybody. So what's been your experience?
Very much that, not knowing who to trust and then not really knowing to make the investments in a proper account, especially accounting professional. I get it. Accounting is not sexy. No one's like, oh my gosh, I cannot wait to file my taxes, right? No one's doing that, but it's so important. And so I find that the not only, oh my gosh, someone's trying to scam me, but even the know how and desire to actually make the investment to find someone that is a quality accountant, bookkeeper, tax strategist, it doesn't exist. That's why I have to pull teeth, say this is actually a major and important expense, and you want to make sure you hire the right person for the job. And I think the other one that comes up a lot is talking about your money. So often I work with a lot of clients to get caught up on taxes because they have not filed in many years and the shame starts to build up of, oh my gosh, I don't who am I going to talk to about this? I don't know who to trust. And then before you know it, you haven't filed taxes in 4 or 5 years. And as a business owner, we know we have to file taxes, whether you're wanting to get lending. Well, first of all, it's illegal not to file your taxes. That's number one. Let's start there. We don't want you in jail. But aside from that, you're missing out on opportunities. And that's what I run into a lot. But a lot of times it's because not feeling safe or to actually talk about the money.
Yeah. I had that experience with my sister recently. So her and I are both podcasters. We're both self-employed. And she's like, I hate tax season because I get this huge tax bill every year because she's a 1099 employee. And so I'm like, are you taking any deductions? And she's like, what do you mean? And I'm like, girl, I am about to lose my whole mind talking to you because there's so many people who just don't understand the fact that even if you're not making money at this moment, if you are doing the activities of trying to open and build a business, that opens up a world of tax saving strategies for you that you need to be taking advantage of. So let's talk about that because I think, first of all, how do we know we are business owners from a tax perspective?
If you are being paid to perform a service or you're selling a product, you have a business. Hard stop. It doesn't mean that you have to have gone down and set up an LLC or worked with an attorney. But if you are in business and you are generating income from providing a service or a product, the IRS looks at you as you're operating in a business if the goal is to turn a profit. But the starting point is, are you performing a service or selling a product with the intention of making money from it? If that's what you're doing, that's a business.
Okay. So if you are doing anything that involves the intention to generate revenue, you need to be looking into what are those tax strategies that you can start implementing. So let's talk about some basics that maybe some people just don't know about. One of the things that I get asked about a lot is, what if I work remotely? What if my business is run from my home? What are some tax saving strategies that exist for those types of folks?
We can't have a strategy if you don't actually know what your numbers are. So the first strategy I give people is to track your income and your expenses. Track everything that's going out. And then as long as you have a record of it, we can figure out where it needs to go. But oftentimes it's very challenging to create a strategy because we don't know what the numbers are. And so the first step is just make sure you have some sort of tracking system. And then when we get into home-based businesses, there are certain rules about this, but typically you can have a home office deduction. So if you have a designated space in your home where you use it for the office and you're not sharing it. So this would not be if you have a kitchen, you're working from your kitchen counter. That's not an office because that's not a designated space for the business. But you have your home office. And then because of that, now you can deduct your mortgage interest, rent if you have it, utilities, internet that covers the house, landscaping. If you get repairs that are done in your home, sometimes that can be very, very expensive. You have a home office, that's something that you can actually deduct. So being mindful of that. So you want to make sure that you are actually tracking it. That's a great opportunity. And then we get into, depending on what type of entity you have, if you are an S corporation, there's this special rule called the Augusta rule. That's when you get real jazzy with it. Now, the caveat is this. You have to have an office space that's not just your home. So if you are only working from your home, that Augusta rule technically does not work. That's the other hang up. And I don't want to go on a tangent, but I want to say this. Instagram and TikTok, they have all these strategies. Do this strategy, do that strategy. Again, this is not a one size fit all in personal finance and or taxes. Make sure you are working with someone who knows your particular situation and tax law. Because here's the thing, someone can tell you, so, oh yeah, you can do this. But what if you don't meet all the check boxes that the IRS says that this particular strategy is available for? Now you can end up being audited and owing penalties and tax. So even as I'm sharing some of these strategies, again, you want to make sure that you're working with someone who understands tax law in your particular situation.
Right. And even your business model too, right? Because I think that there's some accountants that I've met that they don't understand what a content creator is or like how we make money or any of that stuff. So it's hard for them to recommend what to do when they don't even understand your business.
Yes. And that's one of the things I recommend when you're interviewing someone to work with. Ask them, have they worked with someone in your industry? And it's not to say that if they haven't worked with someone in your industry, that they're not going to provide you an excellent service, but you want to get to know what's their mentality and what's their approach. Because if you're working with someone who's super, super conservative and never actually takes time to research or confirm if you can take a deduction or dig a little deeper, chances are you're going to overpay in taxes because they're just like, oh, this is the information you gave me. This is what I'm going to roll with. No, you need someone who's getting in there and asking questions and understands, to your point, your business.
Absolutely. Okay, so one of the things that I heard you mention was entities. Let's talk about what that means. What is a business entity, and do you need one to actually start taking advantage of some tax strategies?
So when I say entity, it's just basically how does the IRS view you for tax filing purposes? And there are different types of entities. You may have heard an S corporation, sole proprietor, partnership, C corporation, things like that. And the cool thing about this is no, you do not have to have a separate entity to actually take the deductions. If you don't have a separate entity, so say you're not a C corp, S corp, as I mentioned, you would be deemed a sole proprietor and you can still take deductions. So if the expense is necessary and ordinary for your business, you can take it. One expense that I know gets missed a lot is mileage. Maybe you work from home, but you're traveling to networking events or you're traveling to meet clients, you're traveling to go to the post office. Like those runs can add up. You want to make sure you're tracking your mileage. I believe it's like about 58, this time about 58 cents a mile. It may even be 60. And so that's an area that whether or not you have a separate entity or you are sole proprietor and just reporting it under your social security number, that's a deduction that you can take. So you are allowed to take expenses that are incurred from you operating your business.
Now, can you get an EIN number as a sole proprietor?
Yes, you can. And typically, what that would look like is a lot of times that happens when you file for your LLC. You become a single member LLC. Typically, that's how that works. And the reason you're doing that is also for the liability protection. Having that LLC, but single member LLC, prior to making any sort of elections, you are able to have that liability protections, which basically says, hey, this LLC is completely separate. It's its own entity over here versus your individual. And I want to say this very loud and clear. This liability protection is only if you are separating your business from your personal. So if you're someone and you're listening to this and you know that you're dibbling and dabbling between your personal account and your business account, or you're running everything out of your business account and all personal expenses, there's no liability protection. You have what they call pierce the corporate veil. So someone will come in and say, well, wait a minute, that's not a separate business. You all are in one pot. And so that's another reason why when you are setting up your business, you want to make sure that you're separating the personal and business to make sure that you keep that protection.
That makes sense. So, in the case that you want to set up your finances in a way that they can clearly see the difference between your personal expenses, the money that you're spending over there versus the money that you're spending in your business, I always recommend to folks like open up a separate business credit card or even like separate personal credit card if you don't have business credit yet and just start funneling all of your expenses through there so that when it comes to tax time your accountant doesn't want to strangle you because they don't have to go through 12 months of statements and highlight what is a personal expense and a business expense to be able to do your taxes.
Exactly. You definitely want to separate them. And I love that you mentioned having the business credit card because we also have to think just for identity protection. Heavens forbid someone gets a hold of your business debit card and drains the account versus with the credit card, they're not touching your actual cash. And so that is a wonderful idea and something to definitely start building as you're growing your business.
Now, you mentioned that on social media, there's a lot of potential misinformation around tax strategies, tax deductions. One of the ones that I see all the time that kind of irks me is this idea of like go and buy a G Wagon and like expense it through your business. And then here you're driving $100,000 car that the business quote unquote has paid for. Can you dive into like what is actually real about that strategy and what's BS?
The first question I always have is, can you actually afford that purchase in the first place? Don't just go grab the G Wagon. And so yes, can you purchase a vehicle in your business name? Absolutely. You certainly can. But here's the caveat. Is it truly a business vehicle? Because if you are not someone who is driving the vehicle for more than 50% of the mileage on the car, that's not a business asset. And what happens when you do that is you actually have to pay tax on that. should you take that deduction, you will actually owe that back. And most often, when we're talking about that strategy, they have not accounted for that. They haven't mentioned any of that. Is it actually a business vehicle? So, can you purchase a vehicle in the business name and write 100% of it off? Yeah, potentially, depending on the weight class and all that. Absolutely. But there are particular rules that you have to make sure you're following. And that is especially true of the mileage.
That makes sense. So it's like, okay, that might be a opportunity if you're going to create like a company that rents out vehicles, or you're going to be a limo driver or something. But if you are a business coach that literally 90% of your business happens from your home, it's going to be hard to justify why you need a $100,000 vehicle through the business if your clients are all virtual.
It's going to be very hard, and that's not ordinary and necessary. You don't need that. And then my other thing is, as business owners, are you watching your cash flow? You hear these strategies, but have you actually looked at projections? Do you have a contingency plan and a plan in place to make sure that you can actually afford some of these purchases, not just for today, but for future as well?
Do you have any favorite tools that you like as a CPA for tracking your expenses and income? Because, some folks like the spreadsheet, some folks like software. What's your favorite strategy?
One that you will use. I work with my clients to get a feel for, okay, what are you actually going to do? Because there are some people, if you're not techie, Excel, and you don't have a significant amount of transactions to where you won't track them, Excel is perfect. Excel is just fine if it's going to get you to track it. My personal favorite is Wave, and it's Wave app, WAVE. And I love that because it's free, it's user friendly, and it produces the reports that you need. So as business owners, when you go out, you want to get lending, maybe even grants, they ask you for financial statements, which are a balance sheet, and it's called an income statement, also a profit and loss. But it actually allows you to produce those reports as well. And so that's really helpful because I've worked with several business owners who never had financials. And so we had to create them. Well, not create them because I do all my things above the law, but we had to basically, produce them because they had never tracked these things. And Wave was perfect for them and super user friendly. QuickBooks is great, but QuickBooks can get pretty dangerous if you don't know what you're doing in there. And before you know it, it is such a mess. And if you are not working with someone that can get in there and clean it up, or if you don't know what you're doing, I tend to stay away from QuickBooks. I love QuickBooks when you have someone that knows what they're doing.
AKA an accountant or bookkeeper or something.
Usually that is the case. But, sometimes business owners are like, well, I've done this before. I'm like, okay, well, if you make sure you can get in there and get everything correct, then go for it. But yes, an accountant or bookkeeper is going to be your best friend.
I love it. How do we know if we need an accountant, Alex? Because that's one of the questions that I get all the time. It's like, how do I know if I can handle this myself or if I need to enlist the help of a professional?
Yes. And the thing is, and when someone asks that, finding out what are you actually looking for, because accountant is such a broad term, right? I'm an accountant, but I would say I'm a tax strategist because I actually go in and figure out, okay, how do we legally minimize your tax to help you achieve your long-term goals? But what are you looking for? If you're looking for someone to help you with the day-to-day tracking of your transactions, that's going to be a bookkeeper. And typically, you need that person. If you are not reconciling your bank accounts monthly or at least every couple of months, chances are you need someone else to be doing it. So whether either you don't have time to do it or you don't know how to do it. But bottom line, if it's not getting done, hire someone. There are many options out there. You don't have to always go get the person who costs $5,000 a month. There are people out there that can be affordable, but you're looking for someone who can basically record your transactions and reconcile, meaning, okay, does this tie back to your bank accounts? Does this tie back to your credit card statements? But it's that day-to-day activity. And then for tax returns, I personally think if you start a business and you're generating income, you should at least have a consultation with a tax accountant. And the reason I say that is, especially if you've never run a business before or you are not in a world with other business owners, there's just so much you don't know. And so working with someone who can at least give you the foundation of things for you to be on the lookout for is just going to allow you to have so much ease going into this entrepreneurial journey. You have so much stuff to worry about as is. So trying to figure out tax stuff and bookkeeping, and it's just too much. So, if it's in your budget, meeting with someone to say, hey, I just want to make sure everything is set up correctly. What can I look out for? What expenses can I make sure that I don't miss? Things like that would be very, very helpful.
Yeah, I absolutely agree. It's like one of those scenarios where you don't know what you don't know, and you could find yourself in a situation where you are paying more in taxes than you should be just because you're not aware of where those opportunities are for you to save. Let's talk about one area of opportunity that I think a lot of folks get stressed out about. It's how much do I pay myself from the business so that I can qualify for, maybe that mortgage in the future or being able to buy a car. Like people, I think there's a lot of emphasis on paying as little tax as possible, but then that involves potentially underreporting your income and then you're kind of shooting yourself in the foot. So how do we strike that balance?
Yes. Oh my gosh. So I like to reverse engineer, right? I like to know, well, what am I shooting for? So if you know that, oh, okay, I have a desire to purchase a $300,000 or $400,000 home. Okay, what type of income do you actually need to make that a reality? So that's how I work with clients. Okay, well, what are we shooting for? And then we can look at the business to see, well, okay, well, is it on paper? Is the business actually generating that income to make that happen? And because it's very tough to say, well, how much do I pay myself? But what's your goal? What are you working towards? So you have to start there is the starting point. But once you have that in mind, then we can start looking at a rough estimate maybe is about 20 to 25%. Typically, when I've had clients who, based on their gross revenue, if they pull out 20 to 25% to hold on for tax purposes, usually by the end of the year, they typically don't owe. But again, that may vary because if you make $1 million, but your expenses are $999,000, you don't have profit. So why did you send the IRS money? Again, look at your situation. When you're taking the 20 or 25%, it's going to be on your net income. So you should have considered what were your expenses and things like that. Because if not, you're going to overpay and send money to the IRS. And I tell people all the time, the government doesn't know what to do with the money that they have. Don't you send any of yours extra? Absolutely not. We're not sending your extra money. They don't know how to manage theirs. You think they're going to do right with yours? They will not. And so I guess I would say I struggle with giving an exact number because it is so individual. And there's so many different nuances because maybe you have certain credits that are available to you that are not available to someone else. And so the most important thing I tell people is know and understand your numbers. And let's start there.
Yeah. I love that advice. And I love the fact that you mentioned the reverse engineering because that's the approach that I took when I was planning to buy a home this year. For the past 2 years, I've been paying myself like $120,000 in salary that's being reported W-2 because I knew that when I was going to a lender, they'd want to see consistent income. So it's like I want to show them that I'm just as good as a quote unquote regular W-2 employee that's like working for someone else, but my business is the one that's paying me. And luckily, I was able to qualify for the mortgage that I needed because I was able to show them that consistent income.
Yes, and that's smart. And that's being proactive, being very proactive and planning for that. Because to your point, I get no one likes to overpay in taxes, but depending on what your long term goals are, you want to make sure that you are showing your income, especially if you actually made the income.
Yeah, the last thing you want is to be able to show on paper that like you made $20,000, even if your business is showing like, multiple six figures of revenue. It doesn't matter as if it's not a clear paper trail as to like what you're actually keeping and taking home.
Exactly. And this is the other horror story that I've had happen with several individuals. And I do want to share this because you may be out here and this is happening to you. I work with individuals who basically overstated their business income to qualify for the mortgage because they're like, oh, I need X amount. So when I say reverse engineer, I'm not saying falsify your income or anything like that. I just want to put that out there because that has happened. And then the individual went to amend the returns to say, oh, wait, I missed these expenses. And the IRS did not allow it. And now they are stuck with, they did not get the property they wanted and they owe the IRS a significant amount of money. So tax planning and being proactive with tax planning is not tax evasion or tax fraud. And so if you are working with it, but seriously, so if you are working with someone who's like, oh, you can take these extra deductions and you don't have proof of this, be mindful of that. You are signing the tax return and it will fall back on you. The IRS does not accept what my accountant told me to do that. They don't care. And so you just want to be mindful. If someone's trying to get you to do things that are not legal, they're not the accountant for you.
Let's get into that too, because like we mentioned in the beginning of the episode, there's a lot of mistrust potentially of financial professionals, and there's a lot of anxiety about choosing the right person. What are some of those questions that people should be asking when they're interviewing a financial professional like a CPA so that they can understand, like, is this person someone that I should trust with my money?
I love the fact that you did mention a CPA. It's very crazy to know this, but to file a tax return, you basically need a P10, which costs you $20 to actually obtain a number to say that you're qualified to file tax returns with the IRS. And so it's a very unregulated industry. And so you may have someone who's filing your tax return who has no sort of certifications. Now, technically, they're supposed to take an online test or quiz or something, but it's not very extensive. And so I love that you said, "Oh, a CPA," because with a CPA, at least they have a certification, and we go through a lot of school and have to take a rigorous exam and continuing
I see
education.
those degrees behind you, ma'am. I could see it.
Right? You can talk about it. And I'm not losing that for anyone. And so having the certifications, that's one start with being able like, okay, well, this person did go to school. They are required to take continuing education, but you can actually confirm. You can go and look on the state websites to make sure that they actually are still licensed because, I've had horror stories. They say they're a CPA and they're faking and frauding. You can confirm that that's an area, but asking them, have you worked with my industry before? How do you stay up to date with the latest tax laws is a great question. What is your response time? What is your approach with tax planning? Like actually find out, okay, how do they come up with this? What is their background? How do they stay on top of the latest and greatest? Have they worked with someone like me? Maybe even share you can ask someone, hey, can you mind sharing one of your favorite client success stories and allow them to actually share what they've accomplished. And then I also love reach out to people in your network because caveat here, make sure it's someone reputable because sometimes don't go asking someone that is all about the shoddy situation. Come on. We want to make sure that we are reaching out to people who you actually think are going to give you reputable referrals and get that information because a lot of times they will be able to direct you with people who are going to be aligned with you.
Yeah, I think that's great advice. It's one of those things where you want to do your due diligence, right? Because you're really allowing this person into a very intimate part of your life, which is your finances. So you got to have a very trustworthy, reciprocal relationship so that both of you can feel good about that. I'm curious for you, what are some of the biggest mistakes that you see business owners doing when it comes to taxes?
The first one, not actually tracking their numbers.
Yeah. I was guilty of that for years.
Yeah, because you can't create a tax plan if you are not looking at the factual numbers. So the first, I feel like that's probably the biggest mistake is not tracking the numbers, not having the proper entity structure. And so I think a lot of times everyone talks about having an LLC, LLC, LLC. Well, LLC is not a taxable entity to the IRS. That's actually more so of a state designation. You have to actually elect how you are being taxed with the IRS. And many times I see someone in the wrong entity structure. Maybe they're a single member LLC and you're just reporting it on their personal return as a sole proprietor, but them being an S Corp would be more beneficial to them. I've seen the reverse. Someone is an S Corp, but there's really no tax advantage or personal advantage to being an S Corp. And now they're required to file a separate tax return, do payroll, and do all these extra things that technically is not necessary. So I think that's another area where I see for taxes gets missed is not having the proper entity structure. And then the other one is just missing out on things like retirement account. When we work for someone, they've set up the retirement accounts. But when we're on our own, we don't always think to do that. And that's not only is it an opportunity to save on taxes, but also build for your future. So I would say those are probably the ones I see a lot.
Yeah, I think there's so much mystery around what are actual deductions. I know when I was going through and working with a CPA, realizing that things like your medical deductibles could be tax deductions, right? So, like what you pay for medical insurance, what you're paying for your retirement, what you're paying yourself as for a salary, that business trip that you're taking to go to a conference, or signing up for a course, or working with a coach. Like, there's a lot of things that you might be missing as opportunities to lower your tax liability just because you don't know what you don't know. And that's why I think when you do decide to work with a professional, if they're the right person for you, they're going to be worth their weight in gold. But I want to kind of peel back the curtain around the cost of hiring a CPA, because I think psychologically there's a lot of people that are like, oh my God, I don't even know if I can afford this. What is the typical range for hiring a CPA?
It can vary. It's crazy how much it can vary, but it also depends on how much involvement do you want your CPA to have, and then what's the complexity of what you have going on. I think if you I personally have not seen someone to get a tax return prepared for less than $500 for a business. And I would say that's on the low end. I would be giving someone a little bit of a side eye if you're working with a CPA who is charging you only $500 to prepare a business tax return and do a good job. And then the other thing is, I think sometimes tax preparation versus tax planning gets a little bit confused. And so someone may be filing your tax return. Filing a tax return is just compliance. It's just saying, yep, you did your due diligence of filing your tax return. But tax planning is when someone is actually going in and looking at your income, your expenses, and strategizing. Are there any additional strategies, maybe loopholes, other credits that you actually may take advantage of that's going to lower your tax liability? And so with tax planning, typically tax planning may run you at a minimum. I've seen it's about $2,500. But again, it could be worth your weight in gold. $2,500, but someone has identified, oh man, making this election is going to save you $30,000 a year for 5 years. That's $150,000, and you pay $2,500. That's a no-brainer. The cost varies, but when you actually depending on what you have going on, and then you also think about your nervous system. What type of energy do you have? If you are a nervous Nelly and you're like, oh my gosh, I don't want to mess anything up, investing in someone that's going to help you understand what you're doing so that way you feel confident, that might give you about 10 years back on your life. Stress will kill you. And so you want to make sure that when you are going into this relationship, to your point, it's someone that you feel comfortable with. And I think as business owners, especially first generation business owners who we don't know what we don't know, make sure you hire someone who's talking to you. If you're only speaking to your person one time a year when you drop off documents and they have no idea what's going on with you, I would encourage you to explore working with someone else, because I cannot tell you the amount of times I've worked with someone and they're like, oh, my accountant never told me that. They never told me that. And they've been spending all this money and they haven't grown. They've overpaid in taxes and they're just as confused as when they started. That can be very discouraging.
Absolutely. Now, let's say that you're listening to this episode and you're realizing, oh my gosh, I've been filing my taxes for years and not taking advantage of things that now I'm aware of. Can you go back and refile your taxes and like potentially get some money back?
Oh yeah, absolutely. So if you realize, oh man, I missed these expenses, and you can actually, I would say, just make sure it's not something that you should have known that you had. And let me give you an example. So if you know that you rent a office building and that you've been paying the rent for the business, I would still go back and amend it, but the IRS could potentially say, well, you should have known that that was an expense. But I would still do it. I would still go back and amend it, because the worst thing that they can say is no. But if you look back and you're like, wow, no, this is actually a business expense that I just didn't know, you can go back, file an amended return. Now, there is a cap. If you were to get a refund, they cap that. So you have only 3 years to amend your tax returns in order to receive a refund. You still can amend, you just will not get the refund. So, for instance, if maybe you still owe tax and you're on a payment plan, you could still amend and then they will wipe away that tax bill, but they wouldn't say, okay, well, you're going to get your money back if it's past 3 years. So that's the only caveat with amending.
Okay. Now, let's say you find yourself in a situation where you do owe taxes and you don't necessarily have the money set aside for that. What are some options that folks have in order to be able to manage that?
So the IRS actually can allow you to set up a payment plan. So you can set up a payment plan with the IRS. Now you will have to pay interest. That's an option. And then depending on if you actually are insolvent. So sometimes you're in a situation where they're just like, look, I have no assets, I have nothing. You may actually be able to work with an actual tax strategist who does like offer and compromises where they actually work with the IRS to negotiate for you to pay less than what you actually owe. And so that is actually something that you would want to work with. And with that, I encourage you to work with someone who like this is something that they do on a regular basis. So that's another option. And then the other thing that I wanted to say is I think sometimes because you don't have the money to pay or you're fearful of, oh my gosh, I'm going to owe you, and you don't file your tax return. That's one of the biggest mistakes that you can make. And so what I encourage people to do is get as much information. If you have all the information and the only thing you're waiting on is like, I'm going to owe, I don't want to pay, go ahead and file. And the reason I say that is when you file your tax return late, you get a penalty. That failure to file penalty is high, up to 25% of your tax bill for failure to file. But if you file and you just don't pay, the failure to pay penalty is so much less. And so you just want to go ahead and at least file. That also means make sure you file your extensions. If you're not filing by the deadline, make sure you're filing an extension. So that way it gives you some additional time to go ahead and file it.
Mm-hmm. Yeah, and I saw that this year, depending on where you live, you may be entitled to an extension that's been built in because of disaster related events. So, like for me in Florida, because I was in a hurricane zone, I can wait until May 15th to file my taxes this year. So, if you are impacted by, a disaster that was declared a federal disaster by FEMA, you could be in a situation where you do have an extended timeline to file your taxes based on just all the craziness that was going on.
And that is helpful to be aware of and stay on top of it. Stay on top of the deadlines. And that's another reason that sometimes having a professional is helpful because they keep up with the deadlines. They're going to remind you, well, you're working with certain people.
It is so important to not always try to be the smartest person in the room because you really don't know everything. And even me, as someone who is a business coach, I know there are times where like I know I'm in over my head and I will call a CFP, I will call a CPA, I will call a tax attorney, whatever it is, because you just don't want to get these things wrong. There's consequential things that can happen when you try to DIY stuff that you're just not necessarily an expert in. I'm curious for you, Alex, because I feel like being a CPA is already a full-time job. Not only are you that, but you're also a CFP. What made you want to get the additional certification, and how does that kind of add to your skill set?
You know how us women of color do. We need all the certifications. We're just extra.
We out here overachieving because that's just how we roll.
Yes, that's just how we roll. In college, I was in banking, and I'm a people person. Most people, when you meet me and you get to know me, you don't think that I'm an accountant.
No, you do not fit the bill like of a stuffy old white man in a shirt and tie who just does not have a sense of humor. You're not giving that vibe.
It was never me. Like I said, I got into accounting because I wanted to be a responsible parent. But the financial planning side, that lights me up and I love it because it's the holistic planning. It's the big picture. And that's what I really enjoy working with clients. So even when I'm doing taxes, like as I see things within their tax return, I'm like, okay, this is how it plays in your long-term vision. And so I got the CFP just for that reason. And I thought it was pretty cool to be just a 0.5%. I was like, well, why not? And then I'm gonna tell y'all a little secret as well. Only I wanted to work with athletes when I was younger because I was like, ooh, this would be a great in, you know what I mean? So if you know anyone, hello. You had to be a CFP to actually to be listed in the agents but listed by the agents. And so I was like, oh my gosh, this is great. And so that was another added bonus of having the CFP. So again, I am here, I'm available, and I am accepting clients.
I love that. It's so nice to know that there are more women of color joining these professional organizations. I met some CFPs at the National CFP conference last year when I spoke there, and it was just so nice to see this increasing diversity, but even still the numbers are dismal. I feel like the last time I checked, it's like less than 4% of CFPs are people of color, which I'm just like, this is why people feel so intimidated walking into financial institutions because we don't see people that look like us and that we feel it can relate to us. So I think that's why the work that you do is so important.
And I love it. Like I said, I love it because sometimes you need to talk to someone who gets you and doesn't make you feel talked down to. But even I get that because it's a male dominated space as well. And the amount of women who are not women of color who come to me and they've been, what do they call it? Broad mansplain. That's it. And I'm just like, really? And I'm like, yeah. And so it is important, the work that we're doing in the financial space in general, making it more reflective of us. Like we're out here.
Absolutely. So you are not just a financial expert, you are an author, you are a coach, you are a single mom.
Yes, I have two daughters.
You've dug yourself out of debt, you have built an amazing net worth. Tell us like how and what keeps you motivated?
My girls definitely keep me motivated. I just try and everything that I didn't have, I want them to have. And the one thing that I didn't have was, and I love my mother, she did the best that she could, but she wasn't the most present. And when I was in public accounting for the decade that I was in there, I was not the most present. Like I look back on all those years that I missed with my oldest, and I'm like, wow, I'm not proud of that. And it's something that now I have to rebuild. And so being the best mother that I can be is really my motivating factor. And quite frankly, money makes the world go round, but also the coaching part of me, that's just me really being happy, healthy, and whole, like internally, because, sometimes things can look great on the outside. And for a really long time, that was me. It looked like, oh my gosh, like everything's going great. And on the inside, I knew that that's not how I felt in a very unhealthy relationship on a job that I didn't enjoy, but I just felt like I had to stay. But it was coming at a cost. So I want to show up for my girls at like really being happy and at peace and all of that. And so I've been on this journey in entrepreneurship, and that's what just drives me.
I love that. Let's dive into that. So now you are working for yourself. You've created this boutique where you're providing tax and accounting services for folks, financial planning services. What was the inspiration for you to create this business and how do you work with clients now?
So when I first started the business, it was basically to get out and get from my very stressful. I was in public accounting. I was like, I have to get out of this. This is a no for me. And then you start looking at the numbers. You're like, wait, I can keep this money myself. I'm doing all the work anyhow. And so it was that transition to get out. And then in my mind, entrepreneurship was to have more time with my kids and all these things. Well, they don't tell you entrepreneurship it is work. If you don't,
It sure is.
right, you have to plan accordingly. Like you have to be mindful of the vision that you want to have for entrepreneurship when you get into it. And so I got into it and realized I was like, okay, she don't love just doing taxes. Like tax prep does not light me up. Tax planning, absolutely. And so over the years, I've transitioned my practice into mainly being tax planning and really being an education hub and mentorship. And so my practice now, I have a select few clients that I work with on tax planning and the gamut of tax preparation. But I'm in a sector of my business that really focuses on the financial coaching and education. So I host workshops, I host events. I mainly women entrepreneurs. Like I had my first event, my first international retreat in Tulum last year. It's coming up again in November. And what I realized is mainly journey in entrepreneurship is it's a lot of internal work that you need to do. And that's impacting your money more than me telling you the strategy. Because we all know we need to save. We know that saving for retirement, we should budget, we should do all these things, and we're not doing it. And a lot of times it's that internal work. And so I've really shifted my practice to be a space of, yeah, we're going to look at your numbers, we're going to give you strategy, but also being a space where I can hold you in that coaching capacity and do some of that more internal work.
I love that. I think that's such a game changer because oftentimes I think people are good at giving strategies and giving the practical information, especially you walk into an accountant's office and you just ask them, like, what should I be doing with my taxes? Okay, fine. But being able to connect on the human level, right? Because there are humans behind the numbers. I think that's what really distinguishes folks who are in it for the right reasons, who are in it to really serve. And from what you're saying, I think your clients are lucky to have you, Alex. So I know there are going to be folks that want to find out more about you. If you're located in Florida, you can work with Alex directly. So tell us where you can find you and where's the best place for us to connect.
For sure. So I'm over in Instagram at the wealth strategist _Alex. That's where I tend to hang out. My website is www.agataxservices.com. And so you can head over there for more of tax services and all that good stuff in education. And I just, again, just want to say to you, thank you, thank you, thank you, thank you, thank you, thank you so much for your platform. And I've followed you forever because, to your point, there are not a lot of women of color in this space that are making noise, but also providing it in a relatable way to where you can actually, oh, I can do that. I can see that. I'm ready for that. And I love the fact that you really also talk about the life balance and not letting these corporate, and I'm not knocking jobs, but they will use you up, chew you up, and spit you out and leave you with nothing left. And in this season, we cannot afford to do that. We just cannot. We have to prioritize ourselves. And I love you giving that platform to show us, okay, and how do we do this? How do we make this a reality? Because it is essential.
Absolutely. Thank you so much for that, Alex. And I really appreciate the work that you're doing to really empower not only business owners, but women in general with their finances. At the end of the day, the work that you do, the work that I do, it's all about empowering women, and it's all about really giving us permission to not just settle for the bare minimum, but we can be out here building empires, building wealth, and doing it as a collective so that we can potentially change the world. So thank you for the work that you do.
Thank you. Thank you.